Well, used responsibly, they can be a real benefit. Used irresponsibly, they can lead to a very messy financial profile. But there's a middle ground of concern as well. In a moment, the bottom line on credit cards and how they're used. With us, former senior bank executive Patty Croft, economist Jim Stanford with the Canadian Auto Workers, Preet Banerjee, freelance financial columnist and broadcaster, and our own senior business correspondent Amanda Lang. Their thoughts coming up, but first, some basics. It's hard to imagine a world without credit cards now. They're used in more than 170 countries, accepted by more than 30 million companies. Visa and MasterCard are the biggies in Canada. Almost 74 million of their cards are out there, commanding 92% of the card market. When you buy something, part of the purchase price goes to the card company, anywhere from 1.5% to 2.6%, depending on your card and the benefits that come with it. You know what that means? You end up paying more. It's a hidden cost the businesses pass on to you. In total, $5 billion a year, all helping, one assumes, with these stunning facts. 1 out of 2 Canadians say they always or often carry debt on their cards. And 1 in 20 Canadians fear they'll die before they pay off their card debt. So how many cards should you have? Are they worth the cost? Are businesses getting ripped off? Is there a better way? Good questions. Let's get some answers. All right, let's have some round the table full disclosure to start with. I've got 2 credit cards. Patty?
I have 2, but for a good reason, because I find whenever I buy something online, I leave that credit card by the computer, and then I go to the store and I don't have one. So that's why I have 2.
Yeah, sure, that's your excuse. Jim?
I have 2 cards.
Okay. Preet?
I have 2. I funnel all my expenses through one of them. The other one is a backup. It also gives me peace of mind sometimes in case the card gets compromised. I know I have the other one. So the second one's for peace of mind. Almost never use it.
Amanda?
I have 2, one with a super low limit that I use for online shopping in case it gets compromised. So one is my real card and the other one is the one I online shop with.
That's interesting. You have one just for online shopping?
Just for online shopping, yeah.
Okay. That would sound like we're sort of averaging out here at 2. Is that the suggestion, 2 credit cards as a max?
Ideally, you probably should just have one card and funnel all your expenses through it, because as you said in the introduction, the risk with credit is that you have all kinds of cards and then you lose track of how much you're spending. Now, in the U.S., the average number is 6 cards per household, and we know what happened to them in terms of the debt situation. So I think the ideal number is 1, so you can have a much better handle on how much you're spending.
Preet?
I'll stick with 2 for the reasons that I mentioned before, for in case you have fraud, and like Amanda's suggestion, having a low limit card for online use and one for other uses. But again, mine, I just have one rewards card that I funnel everything through, and the other one is just for peace of mind.
Amanda?
Yeah, I mean, I think it's obviously super individual. If they're low fees or no fees, you can decide how many you want. What you don't want to be doing, which too many people do, is use a card to pay off a card. If you ever find yourself doing that, the alarm should go off and you're in deep trouble. And that's where you cut them up or put them in the freezer or whatever you need to do to stop using them. You're in way over your head.
Jim?
I like to have 2 because every now and then you have a situation where the Interac is down or whatever, and instead of putting out your hat on the street to help you pay for that restaurant bill, you've got another one you can pull out. So again, as a backup, I have one from each company, and you shouldn't have more than 2.
All right. We all know there was a decision from the Competition Tribunal today that has an impact on credit cards. Basically, there's going to be no change. I don't want to talk about the particulars of it. We've reported on it. But what I do want to talk about is what that decision and the process that led to it told us about the credit card industry. Patty?
I think it says they have an awful lot of power, Peter, particularly in Canada, because it hasn't been the case in other countries around the world. But I also think it tells us a lot about transparency in the retail industry, because I think a lot of Canadians are not aware of the fact that when you use your credit card, the merchant has to pay a fee to the banks and the credit card companies. We don't know how much it is, and we don't know the impact on retail prices. So I think the issue is also about transparency.
Amanda?
I think the jury's out a little bit, but I do think the credit card industry has enormous power, certainly over the retailers, as we can see. We're kicking the can down the road a bit. We're going to get some changes to the way their business gets done. And if you're the credit card companies, that's not necessarily a good thing. You might have preferred what the tribunal would have come up with versus what might happen to you through regulatory change.
All right. Preet, tell me what we should be looking for in a credit card.
Well, everyone's situation is different. If you do carry a balance, then you want to look for a card with the lowest interest rate. Sometimes you have no fee cards. Sometimes you have cards with large annual fees, and it can be worth it if you used all the features of those cards. For example, travel insurance, trip interruption, etc. So the Financial Consumer Agency of Canada has a little tool that allows you to enter inputs like how much you spend on a monthly basis, do you carry a balance, and it actually tells you here are some of the cards that might work best for you. But what I would caution for people is you always have to pay off the balance. So if you're looking for these reward programs, and I'm a big reward program user, you're getting 2 or 3% back on what you're spending, but if you're carrying a balance, you're paying 28%. So if you're using the rewards program and carrying a balance, it tells me you don't understand or you're really bad at math.
It was those, yeah, there was those rewards programs that were at the root of the decision today. I want, you know, we talked a little bit about the pros and cons of credit cards. So I want to break it down a little bit. Give me the cons, Jim. What's wrong with credit cards?
Credit cards hurt you if you aren't in a position to be able to pay off your balance every month, because then you get dinged with the worst interest rates going in the economy. It's outrageous. We know that mortgage rates have come down. The prime rate has come down. Government bond rates have come down. Credit card rates are still up there. 15%, 18%, not uncommon at all. It's an outrageous rate to pay, and you should never subsidize the bank profits by paying that. Do anything else you can to pay off your balance, but don't dip into the credit card. And for a lot of Canadians who have a hard time keeping track of how much they're spending, or whose income is very low to start with, you know, remember, a lot of Canadians, this will surprise some, a lot of Canadians live paycheck to paycheck, so they really are at the edge by the end of each 2-week period. They might accidentally dip into that credit card balance. That's where, if you're in that risk, you're better to use a debit card. That way you get the convenience of the card without the risk of ending up getting socked by these interest costs.
Do you want to add anything on the con side?
Yeah, it encourages overspending because it's very easy to spend money that you don't have. Whereas if you're spending money that's in your bank account, it's tougher to let go of that money. And at any big sporting event, music event, you always see those booths with credit card promotions, get a free T-shirt. And I tell people it's the most expensive free T-shirt you'll ever get in your life.
All right, let's make the argument for credit cards.
Well, Jim sort of made it. You know, the very thing that can be bad about them is what's good. This is an unsecured loan. This is somebody saying, I'm going to trust you, I'm going to give you money you don't have. And if you live paycheck to paycheck and your car breaks down, that's a pretty important thing. So credit cards, you know, for a lot of us, it's a way to kind of make a purchase and defer the payment and, you know, in theory, make money on that in the bank. For most people, it's a way to buy something you otherwise couldn't. And sometimes it's a necessity. And then when your cash flow kicks in, you make up the bridge loan, as it were. So it's kind of a beautiful thing that it exists. And that's why the rates are so high, because a lot of it defaults.
And if you're one of those people who pays your balance every month, it's free money for a month or more.
It's free money, plus if you have a reward card, you get some other advantage, although we are paying for it through higher prices of goods, as the whole tribunal issue is raised.
Patty.
I think, well, good luck for one thing, reserving a car or a hotel if you don't have a credit card. But I think the other thing that credit cards are very important for is establishing a credit rating. Because if you want to borrow money ultimately to buy a house or a car, you've got to have a good credit rating. And one of the best ways to do that is to get a credit card, just buy small purchases, pay off your balance in full so you don't incur credit charges. But that establishes your credit rating. And it's interesting because some people work to pay down their debt and then not use their card for maybe a couple of months, 6 months or whatever. That actually hurts your credit rating, that lack of continuity. So I think one of the big benefits of a credit card, again, is establishing that credit rating.
I want to try and understand how the fees work, how the breakdown on fees work. So let's use an example because it's clear in the name. You've got a CIBC Visa, okay? So we're talking about two companies there. You're talking about the bank and you're talking about the credit card company. Who's making what on the transactions?
Yeah, it's a good point because I don't think a lot of people realize how it works. So the credit card transaction processor, they collect 1.5 to 2.6%. So in that case, it would be Visa or MasterCard getting that fee. And then whatever you pay in interest to carry a balance on your credit card, that goes to the lender, which in most cases in Canada is a bank.
So who's carrying the real clout in that partnership? Who's making the big money?
Well, they're both making a lot of money.
Banks are the winners there.
Yeah, they're both making a lot of money, and I would say the banks maybe have a little bit of an edge because once they have that credit card agreement with you, they then call you and say, would you like balance protection insurance? Would you like life insurance on that? And would you like, you know, ID theft insurance?
The other thing that's interesting about the relationship is those high interest rates that really don't move even though rates do go down elsewhere. The banks don't wear that. They don't wear responsibility for that. We think of it as a Visa or a MasterCard or an Amex problem.
Right.
We don't think of it as Royal Bank is ripping me off or TD is ripping me off, and yet they're the ones often that are benefiting from it.
Now, the banks will argue on those high interest rates the part of the reason they're so high is because they're getting hammered by people who never pay.
Well, I love that one, Peter, because they'll mail you a credit card that you never even asked for, right? They're like the pushers giving you the credit card. They would love for you to take that thing and spend it up to the limit, and then they complain, oh, but people won't pay it back, so we have to charge the higher rate. They get it coming and going.
It is a risk. It's an unsecured loan, as Amanda said. But I think people don't understand, though, that Visa and MasterCard are really global technology companies. They're not issuing the cards. It's the banks that are issuing the cards. So in terms of who makes the money, it's the banks. Yeah.
Is there a better way of doing this, of having credit available to people? You know, is there a better credit card than the ones we're looking at now?
And it's not just the credit, it's also the convenience. In a way, this is like a utility. You know, the fact that you can go out and spend money without actually having the cash, and that is an essential part of a modern economy. So we should be able to find a more fair and transparent way to pay for that service than how it happens now, which is buried in the fees that you pay at the store, and then all these non-transparent fees collected at each step of the way. In Australia and Spain, this is where I think we're going, and I think the tribunal indicated this today. They directly regulated the level of the interchange fee, or the swipe fee as it's called. Instead of the 1.5 to 3% that we pay, they are now paying about 0.5 or 0.6%. And the government came in and said this is just something that is happening everywhere in a modern economy, but we're going to charge a reasonable fee for it. As a result, you lose some of those seemingly free extras that are attached to the credit card, some of the more lucrative rewards, but the basic transaction is delivered much more cheaply for consumers. I think that's the way we should go.
Well, again, Jim kind of nailed why that probably won't happen here. People, if I suddenly come to you and say all of those travel miles you've racked up are now worthless, thanks, courtesy of Jim Flaherty is probably not going to want to wear that issue. But I do think, I would agree that transparency has to be the way forward. Consumers should know that your card doesn't just cost you money, it costs everybody money. If the retailer's paying 2.6% when you use it, they're not just eating it. They can't. So they pass it on to you, they pass it on to the person paying cash, they pass it on to everybody that buys a good. And so the estimate is $5-6 billion a year in higher prices because of these fees. As long as, if we all want to pay it, great. It should be transparent.
You could still have your air miles. It's just you might have to pay extra for them. You might have a high annual fee or something else on the annual fee, or you could just buy a ticket.
So they wouldn't be free air miles anymore? This relationship between the consumer, the misunderstanding or the lack of knowledge, as Amanda points out, that the consumer doesn't realize that, you know, the little guy at the corner store, he's getting nailed here too. We saw a bit of this, obviously, through this argument in front of the Competition Tribunal. But why is there that kind of lack of knowledge? Every once in a while you'll hear about somebody who sees the storekeeper make the argument personally to them.
Actually, that's happened to me at a small local butcher in Oakville. He's got a sign by the cash register that says, when you use credit, I have to pay for it. Would you please consider using cash or debit? And that really raised the awareness for me. It's like, oh, this merchant, this small business person is eating that cost. So to help him continue to be in business, I'm happy to use cash or debit. But maybe we need more signs like that. But it's just like mutual fund fees. Canadians are so complacent about these things. And it goes back to that issue. We need to know what the number is so we can be aware.
Better ways, other countries doing things better?
I don't know of a fundamentally different model. I mean, we have in US, Europe, Australia, New Zealand, they have the ability to charge these extra fees, and there are some problems that have arisen with that. In New Zealand or Australia, some of the retailers are actually charging more of a surcharge, and so the government has to step back in and say, listen, we got to cap those fees. But to put into context for people, if you're going into a store and buying a $1,000 item, if you're paying cash, there's no transaction fee to the merchant. If you're paying debit, it's about 12 cents. If you're paying by credit card, it could be anywhere from $15 to $30. And that is basically saying that the cash and debit customers are subsidizing the rewards programs of the credit card users, and that's why it's inherently unfair.
You still buying $1,000 items in cash?
When I can.
We got to take a quick break here, but when we come back, we've got something to show you. A new ad campaign for credit cards. The question, does it go too far? And welcome back to The Bottom Line. Patty, Jim, Preet, and Amanda are all at the table. Jim, this will be the last time we introduce you with the Canadian Auto Workers.
That's right, Peter.
You're not leaving. They're changing their name.
Unifor Canada will be a bigger, stronger union starting September 1st.
And it'll have its own credit card?
Maybe we'll look into it now that we know how much they make.
For buying cars.
All right, I want to show you an ad. It's about credit cards, and it's created a lot of buzz. It's been out there for a little while now, but watch this, and we're going to talk about it.
Isn't that the Pattersons?
You know, I heard they Smallenfreuden.
Really?
Yep. Probably Smallenfreudening right now.
Look at them, using their Visa card for small purchases they'd make anyway. You're Smallenfreudeners?
We are Smallenfreudening. We earn rewards, see all our spending on one bill. We'd never go back.
All right, aside from using a word that we've never heard before, what is wrong with that ad?
Well, I'll tell you what some people think is wrong with it. The Federation of Independent Business, for instance, in Canada, which was one of the spearheads of the fight against the big fees being charged by credit cards that retailers have no power over, is livid about this, because now they're saying don't just use it for the $1,000 suit that Preet wants to buy. Use it for milk. Use it for a pack of gum. And again, it goes to this kind of consumer lack of awareness, because consumers don't know that at the corner store, when you buy milk and you use a credit card, that guy just made less money, and he can't afford, he or she, to make less money on that quart of milk. So it's a bit of a poke in the eye at the very time when this issue was before the tribunal. When I saw it, I was shocked to think of the timing, that this is when they decided to put it out.
Anyone want to defend it?
Of course they want you to buy more if they're going to make more, but it's probably not going to hurt Maple Leaf Gardens if you pay for your beer and your peanuts with your credit card. But to Amanda's point, to the small business person, if you pay for that cup of coffee with a credit card, you've just wiped out their entire profit margin without even knowing it. So this issue of awareness, like, come on, be aware.
Think of it, the points in a way are kind of like a kickback, right? They're saying to the customer, use the card instead of cash and I'll give you something for it, right? And the problem is that you're actually doing something that's fundamentally inefficient in an economic sense. You shouldn't have to do an electronic transaction to buy the bag of popcorn. But they want you to do it because they'll grease your palm to do it. So I think on a sort of philosophical or moral level, it's offensive, apart from the bad acting in the commercial.
It's always the actor's fault.
Not always. Sometimes it's the directors.
I would never try that at home, I'll tell you that. Preet.
Those people are so incredibly creepy. Why would you want to be anything like them? That being said, I Smallenfreuden myself, but it only works if you pay off the balance. But again, from the merchant's point of view, it is bad, because I've seen those signs in more than one place from merchants asking people to please use debit or cash.
It's interesting that Patty says Maple Leaf Gardens can afford it, because I've actually found myself picking and choosing, right? That Walmart gets my premium credit card and the local retailer doesn't. I'm actually choosing which one's going to have to pay the surcharges.
But that's probably efficient,
which is
right,
a kind of a, maybe it is. If it seems to me there's a better way to go about that than me picking which retailer can afford it.
You're dating yourselves, of course. It's the ACC now. It's not the Maple Leaf Gardens.
It's true.
I've got 1 minute left. Who's going to tell me one thing that would really surprise me, or surprise us generally, the audience, about credit cards?
Every time you leave the country, Peter, they're going to ding you again. 3% excess margin on any foreign exchange transaction on a credit card. It's scandalous, especially because the banks net out all the expenses anyways before they convert any currency, and you don't even know it unless you get your calculator out with your monthly statement to see how bad the exchange rate they gave you was.
I did not know that. Preet, have you got one?
Yeah, I would say pay some attention to your credit score, but not too much, because credit scores actually go up if you carry a balance and always make your payments, because it means you are more profitable to the lender. So you don't need a perfect credit score, you just want to avoid a really bad one.
All right, we're going to leave it at that. A lot of good stuff in here tonight. Really enjoyed the conversation, as we always do with all of you. Enjoy the summer. Thank you as well for watching. If you have any comments about credit cards, drop us a line. You can always find us at cbcnews.ca/thenational.